Welcome to August. It's Trade Live with IG and it's Friday. Non-farm Friday, Ronnie.
Non-farm Friday, but it's a great Friday because we get to start it together, Rich.
I don't think we've done a Friday before together, have we? It's normally Minnie Cooper's slot, sometimes Pete Ward's.
The graveyard slot.
How come you got it this week?
Well, I was just a lucky guy. I was requesting to be with you. I said, I haven't been with Rich all week. I need to get my time in.
So you've been on late shift all week, have you?
Exactly, yeah.
Good morning to you all, Friar Tuck. Our hearts go out to you. It's Sydney's coldest July day in decades. Oh, what a shame to live in paradise.
Yeah.
With spring on the way.
I'm suffering with you, my friend. As a Swede, I can really relate to that.
What do we think cold is in Sydney?
Isn't it
10
like
degrees?
Maybe probably like 20.
Yeah, yeah. There we are. That is our beautiful view from the back of the studio this morning. Can you just see St. Paul's over there? Isn't it? It's looking good this morning, isn't it?
It's looking absolutely brilliant. Is that Blackfriars 1? Is it Blackfriars 1 or 1 Blackfriars? 1 Blackfriars. Got St. Paul's. You know they charge you to go in there.
They charge you. It's not your kind of place, pal.
Listen, I'm not gonna say what I think. We'll take that off screen.
Right, let's look at what's coming up on today's show. It's not the droids you're looking for. Right, we've got overnight action coming up 7:40. That's an interesting one. We've got Ronnie and Martin Harris bringing you the week ahead. Is it going to be as exciting as the week we've just had, which is still not finished yet? We've got my good friend from also Panmure Liberum, Mr. Clement, coming in at 8:35, and that is live. That's not recorded. So, considering we just saw the market roll over.
Is he still on the phone? Is he still on the phone at Panmure? We ever get through to him?
Oh no, he's coming in.
Yeah, but now, is he still on the phone? Does he work the phones at Panmure?
I would imagine he does have a phone. I don't know. What's your point?
Move on. All sessions opening bell, 9 a.m. with Rich McDonald. What he lacks in knowledge, he makes up in charm. And then moving on to Expert Edge, so we can get someone who knows what they're talking about. And that is Bill Blaine, who's going to come in.
What a double header. We get Joe and we get Bill in the same day. I feel by 10 a.m. today, I am going to be a lot more wise.
It's going to feel like you had a Glaswegian kiss, my friend.
To you, Jimmy. Right, before we find out how Ronnie's love life is going, what is the update? One of these days I'm going to ask and he's going to start crying, isn't he? Let's go into overnight action. That's right. So before we go any further, we've got to talk about this market rolling. We said yesterday, my 5 apostles that I trust very much all said to me within a few days, this is at the high. This price action is topping out. And oh boy, did we see it roll yesterday, right from the S&P open at 230, which is around about here. That was the writing was on the cards. 6,411. We are now trading 90 points lower on the S&P. Why, I hear you ask? Because we traveled and we arrived.
Indeed.
What did you see yesterday on the desk, Ronnie?
Yesterday on the desk, it was sort of like we had quite a lot of clients who called in around that time period and said, well, we started the day brilliantly. What happened? And then we were all sort of like scrambling to figure out, well, what actually had gone on. But we couldn't. He was specifically asking for some certain stocks, but we couldn't see why the overall market in general was downward trending because there was no news out. Rather than the rollover.
Every last buyer was in that market. They had all bought, and everybody scratches their head and says, "Why is it going? The markets don't go down, do they? Why is the market going down on good news?"
Yeah, that was exactly the conversation we had.
I don't understand.
I was scooching over to the Bloomberg terminal trying to find any news that was going on, anything that would shake it, but nothing that could really move the market.
And look at it on that chart. You can hardly even see it. That
It's a little blip.
little blip at the end.
But hasn't that been sort of, Richard, hasn't that sort of been the theme in the market, sort of the market discussion these past, say, month or so, where everyone's just scratching their head saying, why is the market continuing to go up? And now we're saying, well, why has it gone down? It was just always going up.
Yeah. So that was a beautiful thing yesterday. But let's get you through the important numbers from last night. So Apple reported numbers about 9:30 p.m. last night. Those were pretty impressive. The strongest revenue beat since December 2021. So a good beat on revenues. Those came in at 94 billion versus expectations of 89.5 billion. That was a 10% increase year on year. EPS 157 against 143 expected. A really strong beat on the EPS line. You had iPhone revenues. That was actually one of the big drivers. So iPhone revenues, where people were concerned, those came through a little bit. Tim Cook admitted benefited from pull forward of demand ahead of the tariffs coming in.
And also, sorry to interrupt, but there's also Chinese stimulus to buy smartphones, which is also one of the reasons. So there's sort of Chinese benefits that you get, sort of contributions when you buy a smartphone. So, and that's also why the Chinese revenues grew by 4%, which was one of the big China, which was one of the big catalysts in the stock itself.
That's right. So China revenues up 4%. China, I'll do it and again so we can cut it for social media.
China.
Okay, we get the point, guys.
China sales up 4% to $15 billion. That was an important number. That allowed the stock to go up 2.5% after market. Let's see what goes through today, because Tim Cook warning there is a 1 billion hit coming in costs from tariffs in the next quarter.
Tariffs, love the tariffs.
I mean,
this quarter was 800 billion. That's actually down from what he warned of 900 billion. But next quarter, he is guiding towards a $1 billion hit there from tariffs. Right, now you can play your things, because we've played it for social media.
Rich, is a
because they managed to mess it up yesterday and they didn't even get anything out.
Is a $1 billion hit really that substantial for a company that does 94 billion a quarter?
Yeah, but that's revenues against cost, remember. So it's not against 94, it's against the profit line that you take.
They're still an incredibly profitable company. I mean, it's not going to make a dent, really.
Well, it does, because it just hit his margin guidance. So he had to come out and say margins are only going to be 46 to 47%. Lower than expected because of tariffs.
I'll tell you what's going to hit its margin guidance is that Epic Games have won their appeal against Google in the Google Play Store, which will set the precedent for other actors and companies to further go in against the Apple Store rules, terms and conditions. Now that's something that's going to hit their margins. But as Rich was kind enough to walk us through Tim Apple's company, we are going to walk through Amazon.
Are you going to try and do this, are you? You got to get it right in one shot. Right, let's go. 3, 2, 1, and action.
Amazon reported Q2 2025 revenue of 167.7 billion, up 12% year on year. Operating income is 19.2 billion, up 31%, and a strong free cash flow. AWS revenue grew 17.5% to 30.9 billion, with 195 billion backlog and ongoing supply constraints. Q3 guidance with revenues of 174 to 179.5 billion, with operating income up to 15.5 to 20.5 billion for the upcoming quarters. Yet, thank you.
That's going to be a hit on TikTok. That
was for my mom and my girlfriend.
Let's get a TikTok out of Ronnie looking at his computer screen, reading out numbers.
You were looking at them as well. I was just making sure that I give our readers at home accurate information. But before the slander going out, I just want to thank my mom, my girlfriend, for that performance. And then we're also moving on. But
girlfriend? It's official.
It's official.
Whoa. Well done, Ronnie. Down on one knee?
No.
She wasn't? So that is impressive. Ronnie has made the commitment.
Yes, I just felt like it's Friday. I give the people what they want. I know you've been dying to find out, but before we move on and from my personal love life, we do have a question. The people have a question to you, Rich. From my brilliant speech here of the Amazon report, sounds pretty good, right? Yet the stock was down 6.5%.
Right. Should we do it properly now for social media? So an Amazon beat on the top and bottom line, but it failed to deliver for investors. The problem being we have to cut that bit.
Ron Burgundy over here.
Ready? The problem being weak operating income guidance for the next quarter. So remember, investors always looking forward. That had the stock down 5% after hours and also took the S&P down a further 12 points. Now that the big four have reported, today, Ronnie, we're moving on to non-farm payrolls. It's got to be something impressive to keep this market. Otherwise, all the confidence could evaporate.
We have some pretty big reports coming in today as well. So we have both economic data and some big companies coming in today. What are you looking out for this today in terms of earnings?
Well, I'll tell you what, we'll keep the preview of the non-farms for quarter past. Oh no, because you're on with Martin then, aren't you?
I am.
Right, let's do it now then. Let's do it now because you're going to do the week ahead for next week. So let's do the non-farm payrolls and the expectation now. Here is the preview that you need for today, NFP. So the consensus is 104,000 jobs versus prior of 147,000. That would take the 3-month average lower because that's been at 150,000 jobs. Fred's bargain break even is between 80 and 100,000 jobs to be added. However, that is below the whisper number. The whisper number is around 120,000 jobs. Unemployment expected to come in at 4.2%. That's a slight increase from last month's 4.1%. But remember, the Fed already has it in its predictions that you could see unemployment up as high as 4.5% by the end of the year. However, Ronnie, I hear you ask, what do we think the reaction would be? Well, JP Morgan give us a beautiful guide here. They say if the jobs number comes in above 144,000, the market's going to take that well. The market is going to be excited by the strength of the the strength of the US economy. On the low side, if we're below that 100,000, JP Morgan think that's taken negatively down as much as 75 basis points. And if we get a really weak number, Ronnie, below 80,000 jobs added, the S&P down 2%.
I mean,
I think that's really
I disagree. Obviously, these highly educated JP Morgan economists, they're not as, as you and me.
Market savvy.
Exactly, yeah. Otherwise, they'll be here trading on the demo like you and me. But my question
is... You just try and tarnish me with a demo account. Do you think I would have these wrinkles if I was trading on a demo account?
Yeah, that's true, mate. You're the best looking 60-year-old guy I've ever met.
No, that's our friends Poppy and Spice that do our top #1 IG podcast now.
Oh, interesting. Can't wait to have a listen. But Rich, forgive me if I'm simplifying things here, but wouldn't weak earnings reports and weak job numbers, wouldn't that be something that would support the case for cutting the rates?
Well, this is the problem that they're in now. Okay, they kind of backed themselves into a corner. Powell's focused very much on inflation and the problems of inflation from tariffs. So if you see a weak jobs number, but a high wage growth number come in today, then that would be carnage. Then the market can be down 2%.
Absolutely. Well, then it's sort of a perfect storm for horrible market conditions.
Yeah. But I mean, with vol being where it is, I see the most likely move down 60 basis points, 80 basis points maybe.
So not even 1%.
No, well done.
Yeah, but we throw around these numbers, 60 basis points. It's 0.6%, guys. It won't move the needle.
Well, it does, but it adds to Martin's point. There is that an island reversal on the S&P. You know, a further dent to confidence. Another 80 basis points takes us down to 6,250. Then suddenly the momentum's gone, well and truly, and you've had all your big positives. Let's not forget the numbers that have been terrible this week. Yeah. UPS got absolutely smashed to pieces. United Health got hit. Novo's got hit. There are a lot of numbers coming through below these tier 1 Mag 7.
Yeah, but I think absolutely. I think, but out of those that you mentioned, sort of United Health, they've sort of in a criminal probe, criminal and civil case with DOJ. So that's hitting them as well. They've had issues going longer than that. But also I think the one company out of those who actually can serve and give guidance to a bigger macroeconomic perspective and sort of the consumer spend is UPS, because it has a direct correlation with consumer spend. Yeah. But I think it's about time we get a bit of like a market pullback. Not that I want it, but I do think it's more than likely that we're gonna get it. And it feels like also the Trump administration sort of sneaked in all these tariffs that they put in place. So 20% on Taiwan, 39% on
consequences haven't even begun yet.
No, that's what I mean. We haven't even seen them, but we've had this sort of taco Trump where they flip-flop back and forth. It's gonna say, oh, now it's a delay, it's a pause, 90 days, etc. But sort of underneath all of this, yesterday it came out with 20% tariffs on Taiwan,
so let's
39% on Switzerland,
perfect,
19% on Cambodia. They said, Thailand, Cambodia, you guys need to stop going to war and find a united enemy in us. Here's 19% tariffs.
Right, so the new tariff rates against some of the US biggest trading partners, there they are, takes you down the April 2nd, but also those new rates that have come out. However, there is another graphic somewhere here that takes you through them all. So here are the tariffs rate. Run us through it.
Syria. I thought Trump wanted to remove restrictions and he wanted to remove everything on Syria so they can start their country fresh again with their new good-looking leader. Was that how he described them?
Oh, no, I didn't. I missed that.
He's a very tall, handsome guy.
Yeah. But the important ones overnight there that have been added to that list are the two on places 5 and 6. Switzerland hit with a 39% tariff overnight on their national holiday. Nice timing. And then Canada, 35%. Mark Carney not particularly pleased with that, but he says talks are still ongoing. So yeah, a whole new August the 1st range of tariffs there. They will come into play in 7 days' time. Will they really?
No.
Will they really?
I mean, calling him the boy who cried wolf is not even doing
it's not
it
fair to the wolf.
Exactly, it's not fair anymore because he's just going back and forth, back and forth. He's going to do this for 4 more years.
4 more years. So yeah, that's our tariff news overnight. What else? We've got the front page of the Financial Times. Let's look at that now. Oh, producer Phil, the Financial Times subscription runs out today. Do you think, that's the poll of the day, do you think producer Phil will find £40 a month to renew our FT subscription?
I don't know. I asked Tom Roberts when I was new on the desk for a FT subscription, and he's like, yeah, we'll sort it out. Still don't have it.
Yeah, but I don't know if you've noticed, we actually show this to the viewers. Well, it's fine. We can show the City AM website.
I always get the physical copy. I can bring it in for you guys next time.
I'll just hold it up.
And you can go up to the screen and hold it up.
Perfect. It'll save us 40 quid a month. Ideal. Right, so Trump reignites global trade war with sweeping tariff regime is your front page. And then we've got, of course, the numbers from Apple and Amazon. But Ronnie's done such a good job of reading those out.
I can read.
That I'd say we've done that one. And yeah, a few sort of opinion pieces there. Goldman Sachs poised to buy into ice cream.
Häagen-Dazs.
Häagen-Dazs. It's, and then here's the one you were talking about. It's Figma. So take us through what happened with Figma yesterday.
Yeah. So Figma, for those of you who don't know, you know, rich, not really tech savvy, not really with the times.
Fact.
So I'd be happy. Maybe I should look at you when I explain this. But yeah, so they are basically Adobe on steroids. It's a much better sort of software program where you do sort of editing. You can do product mock-ups. Sort of our product team, they all use Figma. Our marketing team, they use Figma. So it's something that sort of it's a tool to use for designers, for programmers to sort of build mock-ups. It has a great AI integration, and it's a brilliant company that's being used by over half of the Fortune 500 companies, just to mention a few. They've done really good, and then now this year has been leading up to their IPO at a $1.2 billion valuation, which is supposed to be sort of the hottest software startup that was going to come in now. So they were $1.2 billion valuation, coming in at $33.
Right.
We had quite a few clients who called in, trying to get in, place a limit working order there at 33. Don't be a for a tick, is that the saying goes. I'm not going to say it. Anyhow, so there was pricing at 33. They were up 250% on the day. So safe to say that if you put a working order in at 33, you weren't going to get filled. But it just shows how hot and heavily valued this company is.
It went up to $115 from 33.
Yeah.
That's incredible.
If I was Figma, I would be absolutely fuming with my
bankers.
banker. Yeah, for leaving so much money at the table. I'd be absolutely fuming. But yeah, so I think it's interesting to see. I'm happy that we're finally seeing a bit of a return to the IPO market. We saw Chime, we saw Circle, now we see Figma. So it shows great market sort of sentiment that we have a bullish, and they've all been successful IPOs as well.
Right, we've got a very good question there from Jesse14. When do the Dodge numbers start to show up in to the data? Well, government payrolls are expected to come in flat today because of that freeze, and the freeze has been continued on to October. So yeah, great question. You will see a soft number in the government hiring today. Of course, Sleepy Joe, you know, that was what saved them.
Sleepy Joe, Creepy Joe, you pick your...
And yeah, Steve Davies as well. Good morning to you, sir. With our non-farm Friday. Cannot wait. But first of all, we're going to see what the chart of the day is. What country are we in? Oh, it's US.
United States.
US stock. Who's going to get this? You or I?
You know what? I'll give you this one.
Right.
You deserve it.
Before we go to break, we have to do our request for you. Yes, you at home, the one who isn't subscribed, go on, please give us a subscription, because the more subscribers we get, the more likely we are to get an FT subscription. So, you know, help me, help you.
Please make sure Rich doesn't lose his pension. He really needs these 1,000 subscribers.
And also, if you like what you've seen this morning, if you like to see Ronnie reading out numbers off his screen, give us a like. Or if you prefer Piers in the seat in the morning rather than Ronnie, give us a like, and we'll take that as the vote of the day. Let's go to chart of the day. Hamish, are you ready? Let's go.
Opening bell.
Welcome back to the opening bell. Hamish, you are absolutely on fire. Did you used to work in banking? Because somebody clearly has spent a lot of time looking at charts.
Yeah, he was a bank teller.
A bank teller. Well done, Hamish. Quanta Service, of course, the beautiful thing that is my stock of the year. Didn't look like it in April. They had, in fact, no, it was DeepSeek. DeepSeek really knocked this off its perch. You can tell where back in February. And then, yeah,
we're all laughing at you. And look at you now.
Look at it. Whoa, 250 to 400 in that straight line.
Why don't you pull up the SWC chart while you're at it as well?
Now, well, we'll go into that in a second. I'm almost honoured. So if you go to your watch lists on the platform now, on the left-hand side of the platform, they've given me what you could say enough rope to hang myself. So I now have my own watch list. Sosnov's got his, Bat's got his, and now we've got Rich McDonald's ones to watch. And oh, where have they gone?
Oh, great! That's how much they care for you, Rich. They didn't expect anyone to actually click it.
So we've got Marvell, of course. That is, I can't really take that one. That's Piers'. Novos, I have added that.
Are you buying the dip?
I have bought the dip. I bought the dip a little bit too early because it was a week yesterday. MicroStrategy, of course, that is a, you know, I couldn't put SmartWeb in there just yet. Maybe one day. And then Occidental, of course, because it is Buffett's baby. Anglo's, I think, is going to get bid for at some point in the future. Diageo for the turnaround there with the new CEO selling off Guinness, maybe. GSK, solid company. Surprise, surprise, Vodafone. SSE, Uranium ETF. Had to get that in there for Angeline. The Wisdom Tree, European Defence. That's the best way I feel to play the European Defence team. And ASML is in there. Let's go to the opening bell.
Brought to you by LSEG.
LSEG. Right, I can't get shorts in there. That's the problem. They can't differentiate what would be long and what would be short just yet.
Yeah.
So they could only put long. So that's like my long term.
You're long only.
ISA SIP long only.
Okay, I like that. Yeah,
because there would be a few shorts in there.
You do need to start thinking about the pension, Rich. It's just around the corner, mate.
Right, Watches of Switzerland, where Ronnie gets his Casio from, down 5% this morning. GSK down 1.4. Ronnie, run us through some of those.
Yeah, Flutter Entertainment, gambling behemoth, down 2.42. GSK dropping down as well, 1.66. St. James Place had a brilliant day yesterday. They rallied after the increased inflows. Seems like people have not realized how to read about fees. But now they're coming back to it.
What they should be doing is watching a podcast about managing your own.
Exactly.
Money.
You can get better returns than cash and cheaper products here at IG, the leading investment platform.
Right, on the upside, Unilever carries on from its good numbers yesterday, up 1%. They're going for safety. British American Tobacco coming in for those defensives.
BAT is just beauty of a company. Continuing to beat, continuing to raise dividends. Now that's a company for the ISA.
Yeah, well, that was £28 at the. It didn't look good at all. The CEO wasn't really producing the goods. They didn't believe him, but stock up 40% from the lows.
There you go.
Glencore bouncing from yesterday's weakness, and yeah, otherwise
What else
we have had numbers from IAG. I don't see them anywhere yet. Shall we have a quick look at IAG? That's British Airways, by the way.
Oh, thank you for clarifying.
Right, up 2%.
Yeah, well, there are I think they're making progress on the third tarmac. What's it called? Third terminal.
It's a terminal.
Runway.
Tarmac. There you go. How about read that? You read that out, Ronnie.
Okay, I'll read that out.
Go to paragraph 4, the numbers in it.
Okay, I can read. IAG reported operating profit of 1.68 billion euros or 1.92 billion dollars for American viewers for the quarter, compared with analyst average forecast of 1.4 billion euros in an LSEG poll who sponsor us, and up 35% from a profit of 1.2 billion euros in the same period last year.
Right, stock up 2%, confident in the longer term outlook. So let's look at how that one is on the longer term chart.
You know, an interesting pair trade would be long IAG and then short Wizz Air.
Well, it's funny because our boss, we were talking about this yesterday, and he is, pretty bearish on Wizz Air's model. However, they've got a great order book with Airbus. So he thinks there's a chance that one of the private airlines might come and buy Wizz just for its order book. The business is terrible.
The business is terrible.
But it's hard to get your hands on planes in the next couple of years.
Sort of like buying a bank for the license.
Yeah.
Interesting take. So who do you think that buyer would be?
One of the Emiratis.
I mean, they did just shut down their operations in the Gulf. They tried to expand there, but they just couldn't make it.
Not enough planes.
Not enough planes.
Right, so British Airways, that's a beautiful chart, isn't it? Well done, British Airways.
Yeah, we've been bullish on British Airways for quite some time. Yeah. One of the few stocks that we actually agree upon.
Took me safely to Ibiza and back last week. Very happy.
I thought you were more of an EasyJet, Jet2 holiday guy.
I would have, but it was the lads that booked it. So, right, AstraZeneca now down 3 and GSK down 2. Great start to the watch list. Barclays.
Oh, did he say long only? He meant short only.
Yeah, exactly. Yeah. Sorry, they're all shorts. Right, let's have a look. Oh, Adidas, that would have been the dream short. We did try to talk about it and then didn't put a position on, did we?
Yappa.
So Schneider down 2%, Adidas down again for the third day running from 210 to 165. The party is over.
Yeah, I mean, it's over, and the question is, when will it come back?
They've got to invent a new shoe that doesn't look like it's from 1970.
But isn't that the fashion trends,
No, but well, it has been, and that's the problem. It's done. Yeah. Everyone's got them.
Move along with the times.
Yeah.
It's interesting to see the European banks, because they've BNP Paribas and Deutsche up there, because the European banks have had brilliant results. Deutsche Bank in particular, they had excellent results. I think they increased the revenue by like almost close to doubling it, because they had such horrible results earlier.
Wow.
So I guess that's a bit of a pullback, and I wouldn't read into that much. It's more of a take profit more than anything. Deutsche Lufthansa. Oh, thank you. Yes. Deutsche Lufthansa and Ryanair both down as well. Airbus as well. The airline industry is taking a bit of a toll. Not everyone can be as brilliant as the great British Airways. Salute.
So we see what's going higher in Europe. Are there any? Go.
Bayer for once. Oh, is that Bayer showing positive? Herring as well. And Puma. What's going on? It's the reverse day today.
It is, isn't it? It's all the top shorts.
Yeah, the top shorts.
Yeah, people have seen that they're having to take their gross down. Of course. Excuse me, if you're taking your gross down, what do I actually mean? That screen off, thanks guys. So if you are running, let's say $100 million in a hedge fund, then you've got 50 million of longs, 50 million of shorts. Of course, you've got the best stocks in the world against what you think are the worst stocks. As your longs go up, you've made a lot of money there. As your shorts go down, you've made money there. But when things reverse, you've got to sell the good stocks, which is exactly what happened yesterday, which means if you've taken your gross down to 70 million book, you got to buy back 15 million of the shorts. Now, of course, the shorts, everyone's in them, right? All these guys at Millennium, all the ones at Citadel, everywhere, are all buying the same stocks to buy them back. And that's why you get these strange moves of the unloved stocks going up while all your top ones are dropping.
You know what? That was actually insightful, Rich.
And then if you see 2 or 3 days of that, that's when you start to see real pain, real losses. And when the losses happen, vol starts to tick up. So let's see what volatility has done. Oh, surprise, surprise, it's up 2%. Let's look at that. Yeah, there we go. From yesterday at, to 230. There we go. Vol is up from 18.3 to 19.3. Doesn't sound much, but that's a 5% move.
Yeah, I mean, just the volatility index has itself been extremely volatile in this past year since April. It's just going all over the place. We were actually talking about this on the desk and sort of getting some sort of exposure to this, and perhaps looking at ETFs that one could invest in. Do you have any suggestions, or should I?
For vol,
Yeah.
they have to be such short-term plays because they're usually they have to sell the front month and buy the back month, which means you're selling at 17 and buying at 19. So it's destroying value the whole time. So if you hold it for longer than 5 days, then it's very hard to make money.
Yeah, but it's for a short-term hedge play. It's something that could work brilliantly in a market like this. What else do we have going on?
Did you find the ETF?
Yeah, so
I think this is it. The ProShares VIX short-term futures
exactly
ETF. And I cannot stress enough, this is a short-term vehicle. But when it has, when it's dropped so much, then, if you thought that vol was suddenly going to be up at 22, then this is one way to
Hey,
play
if you
it.
like them up there, you'll love them down here.
Right, what else have we missed? We've missed commodities and FX, that big drop in copper just 24 hours ago, 36 hours ago, I guess now. Let's update you on the commodity market. Go on, Ron Dog.
All right, we got oil remaining steady at oil US crude remaining steady at 68, down 15 basis points, nothing too crazy. Oil Brent crude remaining at 71.5 roughly. Spot gold remaining high 3,000, 3,290. We've seen some peaks at that level. I'm wondering if this sort of market volatility and sort of shaking in the market can push gold up, and it looks like it's going that direction today. Spot platinum.
Yeah, that's come off quite a bit, hasn't it?
It has indeed.
Oh, yeah, wow.
Oh, blimey. What's the cause for that, Rich? You're the commodities guy.
More sellers than buyers.
That's an excellent analysis. I never thought about it that way. Thank you very much for that extremely insightful comment.
But yeah, I think anything that's, momentum has clearly now shifted.
Yeah.
It might come back, non-farm payrolls, everything could change, but there is the winners, the momentum has now changed. Now, talking about non-farm payrolls, let's get a quick poll in for your non-farm payroll guess. It's up there, and that's the result, is it? I didn't even get a chance to vote. I actually don't know what to think about today.
Well, if you don't know what you think about that, I do have a question about something you might have an interesting opinion on.
Well, take us through the non-farm poll results first.
Yes, non-farm payroll guesses, question mark. More than 110K, 34% agrees with that. 110K, which is in line with the forecast, is 27%. Less than 110K is 25%. And less than 100K is 13%. And that's 44 people voting. I would say my guess is in the top, more than 110K. I think we're going to have some pretty strong results coming out.
Yeah, that is, he's gone a little bit low there, considering the whisper number is 120.
Yeah, apologies for producer Phil. He was busy playing with the China button.
He couldn't find Only Time Will Tell.
That's my favorite.
So yeah, the chances are, yes, it's certainly, with everything going into it, you would think that they managed to eke out a 123. So that's mine. 1, 2, 3.
1, 2, 3.
The opposite dusty bin. A reverse dusty bin. You don't know what that is, do you?
Speaking Chinese to me, mate.
2.
Yeah, so we were on the commodities. Speaking of, we've got ExxonMobil and Chevron. I know you're a big Occidental guy, but ExxonMobil and Chevron are both reporting today. What do you think we can expect from those? Because we've had quite low oil prices and quite volatile market as well with the geopolitical environment.
Yeah, it's not been the ideal situation for these producers, has it?
No, I mean, oil has been sort of the safe play leading up to sort of beginning of this year.
Yeah.
It was sort of a safe bet, especially with Trump coming in. It just rallied, especially all these oil companies. I think we're seeing sort of a back to normalization now. OPEC isn't doing things much better as well. So I think we're going to see some quite disappointing results there.
Right, one to take you through that has jumped out. BT cut to neutral at Redburn, so that was expected to weigh on BT there. And then Pearson had their interim results, adjusted operating profit 242 million, which was pretty good. Pearson trying to shift everything online. So, people, how have you been getting on this week? It's been a week of ups and downs, certainly. Boston Frank pointing crypto is down because there's more sellers than buyers. Let's look at those.
Should get him on the show.
Crypto, well, I think the clue's in the name. He'd have to dial in. Now, to be frank, how is our crypto looking this morning? Well, it's 114,000 or 115. It's just dipped under there. And then Ethereum 3645.
And for those of you who aren't professional traders and can't trade Bitcoin or crypto on leverage, IG is now the first major UK broker who offer cash cryptos to their clients.
And how should, yeah, great.
Trade at your own risk, of course, obviously. It's a highly risky and volatile asset.
Now, talking about crypto, we've got a podcast for you coming out this evening. So we did our fourth podcast yesterday, and it was the last of the asset deep dives. So myself, Poppy, on the chat, and Spice had, I must admit, we meant to record for about 45 minutes, and we recorded for 65 minutes because there was so much to say. So if you're interested in how the commodity landscape looks and if that could be or should be in your portfolio, how to put it into your portfolio, then we've got a great podcast coming out where you get your normal podcast. That could be Apple, it could be Spotify, it could be Audible, or you can get it on the IG.com YouTube. And yeah, we go through all the commodities. We go through gold and we go through crypto as well. Plus a good story from Spice on when oil went sub-zero.
Oh, the good old days, eh?
He was trading it and he was short.
Ooh, interesting.
Little teaser there. Spice had to phone up and ask, what happens if oil goes negative?
Did you get any tankers being delivered up to Perth?
Do you know what I almost... So the timing of when it went to negative 40, right? Obviously, none of the cruise liners were... You didn't know if they go out of business.
Yeah.
So we actually looked into leasing a cruise liner and seeing how many barrels we could get delivered for negative $30. So we'd receive $30. Would that be enough to lease the cruise liner? Because they're sitting empty. So
what happened?
They weren't too happy about all the dirt and the idea of pictures being taken for their brand with 200,000 barrels of oil sitting on there.
Not very ESG friendly.
Two-tier Kia, well, that's crypto is not a commodity, so is gold a commodity? Because if gold's a commodity and Bitcoin is mined, then to me...
And it is the digital gold, my friend.
Yeah, so don't know about that two-tier Kia. It's not a definite answer one way or the other. I will completely agree with that. Right, I hear Mark Harris in our ear. So we're going to have a quick wrap with a final look at how these UK names are looking. The worst performer on the day, St James's Place, giving up some of yesterday. AstraZeneca down 2.7, GSK down 1.6, and Scottish Mortgage Trust following the Nasdaq lower, down 1.5%.
We do love the Scottish Mortgage Investment Trust. Big bulls.
Luke Moore, it's Luke Moore's big one, isn't it?
Yeah, he converted me.
Right, a very quick question. What are you doing at the weekend, lover boy?
I actually have my best friend from Sweden coming to visit, so I'll be with him, but I will be perhaps combining the two worlds of my newfound
Your
love.
best friend's going to meet the girlfriend.
Hopefully, yes.
Oh, the smile on your face makes my heart smile.
Thank you, Rich.
Right, I'm going to have a quick coffee and go and meet Joe. Joe will be with us for some macro chat in 20 minutes. But first, it is the mighty Mark Harris taking over. See you in 2.
Okay, guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey,
Oh, thank you for showing me where it is. I have no idea where the economic calendar was, mate.
Oi. Oh, you're not going to get better than cash returns.
Yeah, bloody tosser. And you have picking that. Mate, what the fuck are you wearing?
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Bring me the next shiny new thing. Bring me the next shiny new thing.
We're watching a crisis unfold in the UK and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs, from scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Hello and welcome back to the Ronnie and Martin show, where the two friends from across the different teams at IG combine knowledge, experience, and we bring you what's up on the week ahead. Martin, very welcome. How are you this brilliant Friday morning?
I'm doing great, Ronnie. I think this is fascinating because I don't have the live video feed coming from the studio, so I'm watching myself back on YouTube with a 2 or 3 second delay.
Things that nightmares are made of. Hopefully we can give the viewers at home a better experience than you're experiencing, my friend. So as the name of this show is, the focus of this show is to talk about the week ahead. And we figured, you know, producer Phil and I, we were sitting there brainstorming and we said, who's better than Martin Harris, Mr. Macro himself? Under the macroscope, Martin Harris, to discuss what's coming up on the week ahead. So I've pulled up the economic calendar here on the IG website.
Thank you.
And I'm going to filter for high importance. That's the most important things that's coming up in the week ahead. We will move on to earnings. But before we do so, we want to do a little bit of a macro dive. Martin, can you tell me looking at what's coming up this coming week, could you tell me what's popping out at you and what do you think will drive the markets most?
So look, the real, obviously today, and you and Rich have spoken about it ad nauseum, so we're not going to go into it, but it's the NFP, that's the real one to watch. It's going to be much more important than when we look at the PMIs coming out on, is that going to be next week, Tuesday? Other than that, Chinese imports year on year and exports, fascinating to watch. Really going to be important for us to see how Chinese stimulus is affecting their local markets. We're quite bullish on China at the moment, really given the stimulus. And I think that the concerns for an economy like China is that they almost constantly require government stimulus to get things going. Really somewhat cautious. So you want to see if that's working. And then we get again Bank of England interest rate decision, not holding out for anything too exciting there.
Yeah, when the stimulus came out from China, I mean, they were in quite a dire spot, especially with the real estate crisis, and their approach was sort of to give the local governments funds to stimulate the economy, and they've also had countrywide stimuluses going on as well, but it wasn't really taken quite positively by the market. You said you were quite bullish on China. Would you say that the market's initial reaction was incorrect and it has been working? And do you think they will see results that will sort of confirm this, or what are you expecting?
So I think, look, the real estate sector in China, I think, is still in a difficult position. It's been well supported now, so it appears that the initial and immediate fears around a total collapse of the real estate sector, any kind of, just no one was buying any new builds. People weren't, the existing market was collapsing, so there wasn't worth buying anything else. And very almost like a UK property market on steroids, a lot of wealth tied up in property in China. And so when the Chinese property market is weak, the consumer is weak, the consumer doesn't want to spend, they put a lot of their savings into property. So the Chinese government needed to first of all support that. The part of the Chinese market that we like is media, Chinese luxury goods, and Chinese online gaming. So the ETF that sort of wraps all of that up is the Crane Shares K-Web ETF. We really like Chinese media, and Chinese online consumer goods. So the likes of Tencent being kind of the primary sort of stock that we want to get exposure to.
Apologies, Martin. What did you say the name of the Crane Shares ETF was?
K-Web.
K-Web.
K-W-E-B. Yeah, so it'll be China Internet.
Here we go.
Just put in K-Web. Yeah, don't worry about putting the full name in. Just put K-W-E-B.
Okay, we got China Internet up here. We'll settle for that.
There we go. We'll settle for that.
Yeah. And do you have any companies in particular that you're looking out for? Is it the big ones such as Tencent? That's the usual suspect, or do you have any other companies that are drawing your attention?
Yeah, Tencent, Meituan, those are the two that we really like, and then always following what's happening to BYD in the EV space, heavily subsidized by Chinese government and making severe inroads globally, really at the forefront of pushing Tesla on battery development. So always interested to see what BYD are doing, and I think the only way that BYD is stopped is with tariffs, so on Chinese vehicle imports.
Yeah, and BYD's obviously, like you say, they're making strong inroads into the European market. I've personally started noticing a lot more of them, but there are also other actors in the Chinese. There's sort of popping up new Chinese EV actors every 2 seconds. It feels like we got Xiaomi, who's gone from making electric scooters and speakers to now making EVs, who are selling, like hot butter. I don't know if you can say that, but you get the point. They're doing very well.
Hotcakes, I think, is
like hotcakes. Yeah, like hotcakes. That's what I meant. Thank you. You see, we complete each other, my friend. Very interesting there. And also, one thing that I was looking at before we dive into what we expect the BOE and Andrew Bailey to do. Germany. I mean, Germany has been Europe's biggest economy, but it's also been almost sort of Europe's biggest lagger. Now we have the stimulus of the $500 billion trade, but with all the red tape in Germany and the sort of struggles of the major industries because of players such as BYD, what are you expecting to come out from the balance of trade? Do you think that we're going to see some negative results, or do you think that we're actually going to see some trickling down of this massive stimulus package that they have?
I don't think that we're going to see that stimulus package trickling down just yet. Major concerns are going to be the tariffs on European goods coming up. We're not going to see that affecting anything either yet. So what we would have actually found is that a lot of European and German, in this case, exports ahead of the tariff deal that went live. It goes live in now it'll be 6 days time. So there is a pause for, I think, any goods that are on the water. They've got 7 days until the new European tariffs are enacted. So, and alongside that, if we look at what's happening in the United States in terms of these inventory builds of goods ahead of Christmas, we actually don't expect the tariffs to actually have any effect on inflation until, we might start seeing it in December, January.
Very interesting. And quick take before we move on to equities. Could you tell me, BOE interest rate decision, cut, hold, what are we expecting?
Hold.
Hold.
Expectation is a hold. We'll have to see. I think BOE conservative at this stage. As soon as there's cuts abroad, we might see something change.
I've got producer Phil shouting in my ear, but before he kicks us out, there's 2 stocks I want to get your hot takes on, and they're reporting next week. On Monday, we got Palantir. On Tuesday, we got Advanced Micro Devices. Do you have any sort of expectations on these two? Because we had the big tech this week, and what do you expect from these two?
So, very quick. How much time do we have?
Take your time. Don't let producer Phil stress you.
Before we get into that, what I want to do is a bit of a read across from what the earnings that we've seen into where we're going. So, Microsoft, stellar results, really setting the stage for AI and software at the moment. But it's really what we're seeing now. The companies that are monetizing AI are being rewarded rather than the companies that are just throwing cash at building out AI. This kind of comes across that so the kind of stocks that we like, particularly on AI software, semiconductors, and infrastructure builders who are making money out of the AI spend. So just quickly into Microsoft, a lot of strength in commercial bookings and Azure acceleration. So I'll touch on Azure again later with Amazon, but Azure alone, the market expected 35% growth. Microsoft delivered 39%. So this is very positive for other database companies associated with Microsoft, specifically Snowflake, MongoDB, really positive for them. CoreWeave is another infrastructure supplier, really positive for them. And I think this almost ties into like the number one question we get at the moment is why are the semiconductors down? Why would Nvidia be down, AMD, and so on? Previously, there was a lot of investor overhang around what their question around weaker demand. Right now, that overhang has disappeared. 3 months ago, there was a concern around demand. The overhang has disappeared. The Chinese market is back open for the likes of NVIDIA. Sovereign AI spending power is the game at the moment. So for most governments, the security dynamic is now moving into AI, and so there's a lot of spend coming through there. The adoption for AI is huge. The TAM is essentially the entire world. And so those what we're expecting going into next week is that there'll be a flow through for those stocks in those sectors to be positive. Very quickly onto Amazon, which was, despite, they reported late yesterday, and they had a beat on, their second Q2 result, also better than expected guidance for Q3. But you got a negative price reaction after the print, and that's likely because of the weaker Amazon Web Service year-on-year growth compared to the likes of Azure. So also a bit of a factor of the arrival of higher Amazon Web Services costs. So that's what we're looking at. That kind of sets the scene. Today and going into next week, Palantir being the big one. I had some notes up. Effectively, I think just with the sake of time, let's go through this quite quickly. Palantir, massive growth. The main concerns there is that really driven hard by government contracts. If those government contracts have now basically all been signed, the order book is full, we need to see some changes or some growth coming from the consumer side. So that's Palantir. Which other ones did we want to touch on?
I don't think we have time, unfortunately. We'll have to save that for our imagination offline. But thank you very much for your time, Martin. Insightful and entertaining as always. Infotainment, one would call it. Thank you very much. And
thank you, Ronnie. You're always the best.
Thank you.
In the last video, we talked about how the S&P 500 has a higher PE ratio than the FTSE 100 because investors expect faster earnings growth. But let's look at what happens when those earnings actually grow and why that makes such a big difference. Here's the S&P 500 in year one. Its PE ratio is 24 times, which means investors are paying 24 times the earnings to buy shares. This tower represents the share price. The height of each block reflects the unit of earnings needed to support that valuation. Now, let's jump forward to year two. The share price hasn't changed. This tower is exactly the same height, but look what's happened to the earnings. Each of these larger blocks represents higher earnings compared with the smaller ones from year one. Because the earnings have grown 50%, what used to be 24 times earnings in year one is now only 16 times earnings in year two. That's a huge improvement in valuation, even though the share prices have stayed the same. This is the power of earnings growth. When companies deliver stronger earnings, the PE ratio naturally comes down, making the stock look cheaper, even if the share price hasn't changed. And when investors see that kind of growth, they're more likely to stay invested or even buy more shares. And that's what pushes the PE ratio back up. And that's what makes shares go up or down. Now compare that to the FTSE 100 where earnings grow more slowly. Even if the share price stays the same, the PE ratio doesn't improve as dramatically because the earnings aren't growing as fast. That's why growth is such a critical factor in investing. It's what drives long-term value. So here's the big lesson. Earnings growth doesn't just boost a company's value. It makes the stock more attractive by improving its valuation over time. As an investor, the holy grail is to find companies that can grow their earnings by more and for longer than other investors may already expect. This may even mean avoiding shares that are already very popular, overowned, and potentially overvalued. Because if a stock on a very high PE ratio misses its earnings estimates, then the price can come crashing down. Welcome to our Expert Edge section. I'm very happy to have Panmure Liberum's Head of Strategy, Joe Clement, back with us.
Hi, morning.
As Angelina's off sunning herself.
Yeah, and she's right to do that today because, you know, it's a boring day in the market. Nothing happened this week, so it's all fine. It's the best time to go on vacation.
That's we actually said, you know, it's a quiet week. There's no news.
No.
Yeah.
No, I mean, seriously, I was like, on Monday I came to the office, it's like, what am I going to do all week? And next Monday I'm going to come to the office and it's like, yeah, still nothing to do here.
What has been the most important thing so far this week, or is it still to happen, do you think?
I think it is happening right now, obviously, with the market digesting the tariff news.
Let's get the chart up there. Sorry, Joe.
And especially, I would say, while most of us here in Europe don't have really a big surprise, I think the massive surprise is Switzerland. 39% tariffs on Swiss imports on Swiss exports to the US. Now, that obviously excludes pharmaceutical exports. They are going to be separate, and 60% of Swiss exports to the US are drugs and pharmaceuticals.
Is that from Roche?
Roche, Novartis, Lonza, the big three, but also like small biotech companies, etc. But even so, you know, the Swiss exports to the US, if you exclude pharmaceuticals, which I think will sooner or later be hit with a 25% tariff, which will be really bad for Ireland as well, because that's the other big country in Europe that exports pharmaceuticals to the US. But if we take that to one side for the time being, guess what? Your Swiss watches in the US are suddenly becoming much more expensive. And I think companies like Richemont and Swatch are really going to be hit today.
Let's have a look at Richemont, because we can look at the South African price of there, and you are spot on. Down 3%, Richemont, which is almost back to those April levels. Of course, the maker of some beautiful names, Cartier.
Cartier, the Mont Blanc pens, for example, lots and lots of watches. Richemont is really dominant in the watch space, Longines, Cartier, those kinds of watches.
Yeah.
If you go to the top end of the watch space, Rolex obviously is private, so we don't know, but they're all manufactured in Switzerland, so your Rolex in the US is certainly going to jump.
I've just remembered it's a Swiss national holiday. That's why they aren't open. I was looking for the Novartis price.
Oh yeah, of course. It's Swiss National Day, 1st of August. And I was checking the Swiss newspapers this morning, and they are, well, their gasted is flubbered, to say, to put it like this. They did not understand why they were caught with a 39% tariff, especially because that is even higher than the 2nd of April Liberation Day announcement to begin with. And my personal, as somebody who has lived in Switzerland for 21 years, as a German, my personal interpretation is simply the Swiss try to do what they always do. They're very deliberate, very unflashy, and they try to negotiate in a Swiss way, like they always do. And then you're kind of meeting your nemesis in the phrase of Donald Trump, who wants a flashy outcome and he wants the results quick. And Switzerland and Swiss people just aren't built for that. And I guess in the end they thought, well, we just kind of piggyback on whatever the EU gets, and then that's the same thing. And I think there's a rude awakening today in Switzerland with that.
Now, let's move on to that EU deal.
Yeah.
15% rushed through, perhaps.
Yeah.
Will there be a political fallout? And do they have to vote on whether they accept it?
No, they don't have to vote on that. So that's totally within the power of the European Commission to negotiate these and to accept these. But what really annoyed me terribly when I came back into the office on Monday, because on Sunday I wrote my reaction piece for our clients about the EU deal. And I thought, well, that's pretty mainstream. It's pretty much the same thing as Japan. So it's not great, but in the end, it's actually a good deal for Europe because effectively with 15%, they get the same tariff as their competitors from Japan and a lower tariff than Chinese competitors. So in the US, they might even gain market share from Chinese firms.
Right.
I come in and the entire press is like, this is the worst deal ever. This is a capitulation, etc. So let me make my point. Okay, I've already made my point. 15% is the same as Japan. And a week earlier, Japan got 15% and promised $550 billion in investments in the US. And it was celebrated. The Japanese market was up 3.5%.
Yeah.
Now, the EU gets 15% and promises 600 billion, which as a share of GDP is much, much less than Japan's costs. And people are like, this is a capitulation, this is an absolute disaster. Let's face it, $600 billion in investments from the EU into the US is effectively what European companies have invested since 2022 over the last 3 years anyway.
Okay.
So that's an empty promise. It's just a wonderful headline that doesn't mean anything. And the other thing was $750 billion in energy imports, at which point you have to say, over the next 3 years, the US can't even deliver that many oil and gas and coal exports to the EU.
Well, they can from Russia via the US. They can do it that way.
It's just impossible because the US, and where it really, the bottleneck is not the production capacity of US oil and gas producers and coal mines. It's the harbors. LNG ports in the US are already operating at capacity. They can't expand their capacity anymore. So this is all just literally bullshit. The 750 billion is a complete nonsense number, and the 600 billion will happen anyway.
What about the reaction of euro-dollar? So let's have a look at that chart, and you can see that it's come off from 117.5 to 114.
Yeah.
Those are big moves.
Yeah, no, absolutely. The dollar is the Lazarus, so to say, coming back from the dead. And to be perfectly honest, the dollar was, from a sentiment perspective, very oversold. I personally like the Centix, the weekly Centix survey, where people have been euro bullish more than any time in the last, I think, 20 years or so.
Yeah.
So I think this is not necessarily a massive trend change, even though I know we've broken through trend lines that are quite meaningful. I think over the next 1 to 3 years, the dollar will still continue to weaken because the fundamentals of this entire trade deal are horrible for the US.
For the US?
For the US.
Across the board, not just the European.
Across the board. So to give you a couple of numbers, and we have our own forecast. So we think that the deal as it is right now will add 1.1% of inflation over the next 12 months. So pushing US on top of 2.5. So basically pushing it in the 3.5 to 4% inflation rate in early 2026. We also expect that US GDP will get roughly 0.7% hit from those tariffs over the next 12 months. In the long run, we expect the US to be 0.4% smaller in terms of GDP economic size than it would have been without it. While the EU is actually going to be a little bit bigger.
Right.
Yeah, because as I said, they pay a lower tariff than China. So a lot of American importers, if they can't get it at home, will import it from Europe rather than China.
So together, as a US against rest of world, you still believe in this deterioration of American exceptionalism?
Absolutely.
Okay.
It's just a matter of time.
Because
I mean, and by the way, I am actually one of the least pessimistic out there. I did a little bit of an exercise. I don't really have the details of other forecasters, but I have the details of two other forecasters, which is the Yale Budget Lab, which makes its forecasts available for free. And they expect that inflation will go up by 1.4% and the US economy will shrink by 1% to 1.1%. Bloomberg Economics, the other ones that I have access to, expect inflation to go up by 1.8%. I have no idea what kind of a model you have to have in order to come up with 2%, but more than 1% drop in US GDP. In other words, the US is hitting a really big stagflationary hit now, which also means that the Fed can't really cut interest rates.
How do we put that into trades then? Because, you know, we know what we think of economists, we know what we think of their data and their models.
Go on then.
Your job is to take those models, take the theory and put it into a strategy on how to make money.
Okay, two trades. Number one, I continue to be short treasuries. I am in this camp where I think the 10-year treasury yield will move towards 5% in the second half of this year. I'm still hopeful that it will cross the 5, but it might just fall short of it a little bit. But that's still, we're still talking 50 to 60 basis points higher yields from where we are today.
Okay.
And then the other one is...
Sorry, I just let's get those up. So you're talking about the 10-year going from 4.38 to above 5.
Yes. So as I said, it might fall a little bit short, but 50 to 60 basis points higher from where we are here. You want to short the 10-year at this juncture.
Shorting the bond.
Shorting the bond, higher the yields. And the other thing that I would do at this point in time is if I have a long dollar position, I would take strength in the dollar to take some money off there and put it into mostly, I would say, euro. I would have normally said Swiss franc in euros, but after today's Swiss news, I wouldn't put it into Swiss franc anymore. That is a good currency to be in. I also do think that British sterling could be an alternative, but I think the first candidate to put it in is the euro.
It's funny because Poppy and I, on the chat, who's of course Mr. CJ Fellingham of ex-Soros, ex-BlackRock, you know, a long list such as yourself. So two very wise gentlemen that have been in this market for long enough to know and to call things, also thinks that GBP has a rally off the now sub 132. Bank of England next week, one of our viewers said 100% nailed on cut. What was your answer to that in one word?
I think that's bullshit. I mean, I think it's literally a 50-50 shot. And the reason is that inflation pressures in the UK are building as well. And what the PMI data shows, and yes, I say this on a day when an alternative business confidence index struck a new low. So business confidence is not that great, but in the manufacturing sector, we actually do see that. And what crucially we do see in the manufacturing sector is price pressure. Manufacturing companies report higher cost pressures, higher costs that are coming through. And if the Bank of England pays any attention to that, it is not that clear cut. Now, having said that, if they cut next week, then I think they will cut maybe one more time in December, but that's about it. Okay. And if they don't cut next week, then they will cut in September at the next meeting. So overall, I think it's a matter of timing and when, not if, because I think that the Bank of England will cut one more time, possibly two more times. But given our leading indicators and our confidence that the UK economy is actually strengthening a little bit, I think it's more one time than two times.
Would you rather be in Andrew Bailey's shoes or Jerome Powell's?
Oh, easy, Jerome Powell's. Much easier. First of all, I would have to do the job for less than 12 months. And second of all, the picture in terms of inflation and growth is so easy for the US. It's a stagflationary impulse. We already see in the most imported goods a massive increase in inflation in the US. And from a political perspective, if you want to defend the independence of the Fed, then you steadfastly push for no rate cuts in the second half of this year, which would be good to fight inflation. It would be good for the independence of the Fed. It would be roundabout the best thing to do.
Okay, so your idea of higher yields comes from inflation. It also comes from a stubborn Fed, rightly so.
Yeah.
What about deflationary impact of things like AI?
That is a long-term story. First, we have to basically deploy all those investments. And here, I'm totally a fan of AI. I think it is really a game changer in some industries. It can increase productivity. But I'm also concerned that people get carried away a little bit, as they always do. That's a normal thing. But to be perfectly honest, if you look at, not Aswath Damodaran, who won the Nobel Prize in Economics last year? The MIT economist. But he says, he calculates that over the next 10 years on the US economy, the productivity gains from AI will be 1% cumulative. So 0.1% per year. And the argument he makes is that, yes, there are certain roles like being a law clerk or being a software programmer where your productivity gains are huge, but you lose some of those productivity gains because you have to check AI all the time.
Right.
You spend a lot of time checking the output that your AI gives. But if you don't, you submit legal cases to a judge and the judge finds out you're quoting made-up cases and the entire case gets thrown out.
This happens.
This happened.
Yeah.
It's not happens. This happened a couple of times in the US now.
Yeah.
So you basically risk losing the case because you didn't check the AI output. So you lose a lot of your productivity gains in just checking it. And then the other thing is that, you know, a large part of the economy is not threatened by AI. If you are a cook, well, what is generative AI going to do for you except pull out maybe a nice recipe, but afterwards you still have to cook it yourself.
Yeah. Okay, so you'd be happy to be in Jerome Powell's shoes because you would be happy standing up to Donald, who we've just heard the new acronym of DEAL, which is Donald expects a lot.
Yeah, he does. Whether he gets it is a different story.
Yeah, the art of the deal. But what about the effect on earnings and therefore the S&P 500? Because we are seeing these behemoths come through with the huge numbers and the huge capex, which feeds into benefits for other companies. Are we at a stage now where you can't, the S&P 500, there's no point in looking at it because it's only 10 companies?
So yes, so that's indeed what we also see in this earnings season very clearly. So services companies, whether it's banks or software services like Meta, like Alphabet, etc., they are doing great. Why? Because, well, they are not directly impacted by any tariffs and they're benefiting from the AI investment boom. So that's really good for them. And that is something that carries the S&P 500. The moment you go into the manufacturing space or the retail space, consumer products, you even saw it with Apple's results yesterday. You know, they had fantastic results because iPhone 16 sold like hotcakes, but Tim Cook was honest enough to say that a lot of it apparently was people rushing to buy an iPhone 16 before the tariffs come into place and they have to pay more for it. So expect the Q3 earnings to be somewhat muted and Q4 earnings as well.
And a lower margin because of tariffs.
And the lower market because of tariffs. And then if you look at GM and other companies that rely heavily on imports, they're all taking massive hits from the tariffs. So Stellantis has taken 2 billion down and GM 1 billion, or the other way around. It's like one was 1 billion, the other one was 2 billion. But it's ridiculous amounts of money that they are basically being hit with at this point in time. So I would say the S&P 500 is going to be even more a tale of two markets, with tech services going okay. And probably the only thing you have to worry on tech services is if you really believe my story about higher treasury yields, that means higher discount rates, and that's usually not great for growth companies. And then the rest of the index, especially manufacturing and consumer goods, really in dire straits in the second half of this year.
So it's tricky to put on value versus growth because you do have a lot of those.
You can't do any of that, really. The best thing you can do is actually at the moment put a quality, so high profitability, because that will naturally zoom you into some of the Magnificent Seven that is not Tesla. Good.
Yeah. Well, that takes us perfectly on to the European autos. You mentioned Stellantis there. Renault had horrible numbers.
And they don't even export to the US.
There was no excuse.
There's no excuse.
The Chinese are coming for us.
Yes.
Now, Piers and I actually took a BYD vehicle into work yesterday.
How was it?
Do you know, it was very comfortable. It looked good. It did the job. The driver said that it was just a basic model, so the miles per gallon weren't quite miles per gallon on an electric vehicle.
I was just going to say the range.
the range
and the consumption.
Pretty standard. But I'd rather have that than a Renault. So where do we sit with these European autos? Because
I'm still short European autos.
Okay.
And for two reasons. The US isn't really that much of a big deal unless we're talking about Aston Martin or Porsche. But mostly it is about the lack of demand from China. So whether we're talking Volkswagen, Mercedes, etc., they're all struggling in China, which has become their largest or second largest market. And then the competition in the EV market. All over Europe, the European manufacturers are still years behind Tesla and the Chinese.
And billions of capex.
And my favorite statistic is if you look at new electric vehicle car sales in 3 years ago, 2021 or 2020, Chinese EV manufacturers were less than 3% of new electric cars. At the end of 2024, we're talking about 24%. So they basically are, at the moment, cleaning up the entire market. Because one thing we learn is that while there's a lot of brand loyalty, and I say that as somebody whose dad worked for Mercedes-Benz his entire life, everybody in Europe, especially in Germany, we have a lot of brand loyalty. Once a Mercedes guy, always a Mercedes guy. You don't switch to BMW because you will be disinherited by your dad, I can tell you that. But to change to an EV, people are willing to try something new.
Yes, very true.
That's such a big structural change. And then they sit in a BYD or an MG or a Tesla, and they find out, well, it's actually just as good a build quality as a German-made car or a French car.
I can't believe what I'm hearing. Please don't put German car and French car in the same sentence.
Yeah, okay. All right. That might be a bit much, but German car.
Right. Let's have a really quick look at how these US all sessions are opening in the all sessions opening bell. Oh, Amazon is leading us lower. Amazon down 7%, Joe. 7. Tesla following it down as well, 1%. We got Intel, Nike, Boeing, all on that losers list. AMD down 3, down she goes.
And Amazon is a bit of a surprise that it reacts that much. I mean, the numbers weren't great, and yes, one of the key problems for Amazon are the tariffs, and in particular that the Trump administration said that it will skip the de minimis rule. So anything imported into the US that is valued less than $800, which at the moment is not tariffed, will be tariffed in the future. And guess what? That's horrible news for Shein, which isn't listed yet, or are they listed?
Not yet. Okay. Not yet.
Well, they're hit by one bad news after another, but it's definitely also bad news for Amazon.
most definitely. Apple holding its head above water, though. Of course, it was the one that is under-owned, underappreciated, and has underperformed. So that one's up 2. Microsoft holding the 536 level, down from 560 at one point yesterday. But some of the other movers, oh boy, Coinbase. I have never seen such a bad interview as the Coinbase CFO on CNBC yesterday. She was terrible. Reading off a laptop like this. Yes, we think for the next quarter that, there might be some costs involved. It was embarrassing.
Oh my God.
And hence, down 11% on an earnings miss of a stock that has really done very, very well. And then, taking some of the others down with it. But you said you still short European autos. What's the long against it?
So at this point in time, the longs, I am still long European banks. And I have to say BBVA has jumped 6% the last couple of days after they presented great earnings. UBS has done extremely well as well. So I'm inclined to take profits there. The ones where I am still very long is airlines, in particular IAG, the owner, International Intercontinental Airlines Group, which is the owner of British Airways and Iberia. But also EasyJet, Ryanair, traditionally a terrible airline to fly with, but a great stock to own. It's a bit expensive at the moment, so I would prefer EasyJet and IAG, but they are really great stocks to have. And then the other ones is more in the leisure sector. So European hotels like Accor, like Whitbread, those kinds of guys that are benefiting from more tourism within the EU as Europeans have a little bit more money to spend.
Now, that is a way that strategists play the market, right? Let's have a look at these iShares sector swaps. These are available on the IG platform, and they're a great way to express your view. You can be short the autos and then long the airlines. You can be long the banks. You could be long basic resources and then short, take your pick. What would the second short be, do you think?
Ooh, a second short is, it's on a basic resources side, I would say in Europe, basic resources. Because the exception to that is gold miners with gold going through the roof. But all the other miners and companies in the basic resources sector like cement, etc., and steel are just not that great to own at the moment.
Wonderful. And your colleague who sits behind you, Tom Price from earlier in the week, does agree. He said, hold back. We're getting calls from long funds interested in Rios. However, just time to take a little summer holiday.
Oh, I mean, and Tom has been spot on with being bearish on miners and metals for the last 18 months or so. I tried for about 6 months to go against him and be bullish. Don't. Trust him more than me.
Joe, really excellent value from you this morning. Thank you so much. We wish you the best for the weather tonight, because you could be off to a comedy night, hopefully.
Well, if it's not raining, I'm going to the Ealing Comedy Festival in West London, but it is outdoors, and if it's raining and muddy, I'm not going, because I'm too old for Glastonbury, and I'm definitely too old to sit in the mud watching some comedy.
Fantastic. Danke schön.
Gerne geschehen.
Tschüss.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this, we get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
We're watching a crisis unfold in the UK, and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset, with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs. From scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Welcome back, everybody. We got Bill Blaine in the house as the Nasdaq is about to go through 23,000. What a morning, Bill.
I'm looking at the US stocks and I'm figuring out, how is that possible? What's going on? Have they not seen the news? Now, I know you're going to say, yet another bear on the program. I'm not a bear. I'm a bond trader.
The bond trader can be the winner, but Joe didn't think so. Joe thinks that we could see up to 1 additional point of inflation, 3.5% in the US in the next 12 months, and that takes bond yields above 5%. Is that right?
I think that's distinctly possible. You know, the fact that we could well be heading into bond bear market if some of the worst outcomes of trade policy come true, that's very, very probable. And remember that if you end up with very high interest rates, that has a massive effect on the stock markets as well. It will take a lot of the froth out of the markets. Remember, Rich, in bonds there is truth.
Yes.
In stocks there are stories.
Stories and hopes. And there seems to be a lot of hope in there at the moment at 23 times earnings.
And to use another cliche, hope is never a good strategy.
What do we do then? What do we do? People sitting at home have got a lot of long positions. They've done very, very well on them. How do they protect themselves?
This is, we are heading towards a frothy top in markets. How frothy that top is really going to be a function of how bad the economics play out. Now, earlier this week, I was speaking at a conference and I was saying, well, look, Trump's actually pulled off a bit of a blinder here. He's pretty much managed to get the rest of the world to agree to 15% tariffs.
Yeah.
And there's been a lot of criticism of that, especially within the EU, for accepting a 15% tariff rate and zero tariffs on US exports. But, you know, that's a pragmatic thing. It's better to have an agreement than to have no agreement. But then this morning, we've got the other side of that, where Trump has slapped on a 35% tariff on Canada and a 39% tariff on the Swiss. Now, come on, that's a really interesting axis of evil, Switzerland and Canada. Come on. But the effect is going to be quite, it's going to be out of all proportion. This is what I was thinking about this morning in my daily comment, The Morning Porridge. And the first thing that struck me, I was actually going to go with another thing, which was about the costs of immigration this morning.
Okay.
But I decided to go with the Canada story because that's a problem for the UK. Because you got to remember that our king, King Charles, is also head of state of Canada.
Of course.
Now, I think it's very difficult for the King of Canada to be welcoming a man who's just declared economic war to come on a state visit in September. Now, I think the pragmatic answer is let's all keep smiling and let's not upset Donald Trump.
Yeah.
But you get to a stage where that begins to affect sentiment and mood. And remember, markets, especially stock markets, are all about sentiment and mood. There's nothing clever about markets. They're just a voting machine that weighs up what people are thinking. And if people are increasingly thinking that, you know, these tariffs are really a bad idea, you know, that begins to play on the market sentiment. Now, the reason that I was saying earlier this week that Trump's played a blinder is because we have seen, by and large, exporters to the US and US importers absorbing most of the costs of the tariffs.
Absolutely.
These have not been reflected in the costs that US consumers are paying. And that's a really good thing. And that leads us on to a totally different discussion, which is just how badly off US consumers are just now. I would describe them as pretty much tapped out. They've just, if you're a young person, tapped over or tapped out? I'm not sure, Rich. What would we say back in Edinburgh?
Well,
we'd say they're busted.
In a wee spot of bother because
what can they do? Let's just wander back into our usual language and stop putting on these silly English accents.
Yeah, exactly. This BBC,
received wisdom. Anyway, no, but the reality is that US consumers are in a really bad place just now. Trump's promise to them has been he's going to restore prosperity. But the reality is they're getting hit with massively higher medical costs. They're going to have to start paying back their student loans. We are seeing defaults starting to creep up in credit cards. And the first place you look is in the auto industry. Mm-hmm. Are they paying their car loans? And that number is beginning to creep up, the number of car loans that are in default. So American consumers don't have the money to cope with an inflationary impulse. And thus far, Trump has succeeded in avoiding that impulse hitting the nation. But the thing is, this trade war with Canada doesn't make much sense because the US auto industry relies on Canada for a large part of its parts, which are all going to get dumped. Not at the 35% rate. I'm just trying to check that just now.
Yeah, because they're in the agreement, aren't they?
Yeah, there's all kinds of trade agreements are never simple, which is why Trump has never signed a trade agreement. All these big announcements last week about, they've done the right thing by setting up bollocks they have. I mean, can't say that on the TV
you say what you want, Bill Blaine.
The reality is these are not trade agreements, these are trade outlines, and they're good. You know, they are good. At the end of the day, let's get trade going again. But what we've seen with the Swiss and the Canadian announcement is just a reminder of how capricious Donald Trump is. and that we are not out of this period of uncertainty. Now, that then takes us back to the stock market, which you were originally asking about, because I think we're getting something of a top. How bad that top is, whether it's just another correction, and I suspect it will just be a correction, even less than the one that we saw in April, where we just get the market saying, okay, it's pushed a lot higher. You know, you were talking about the Amazon results earlier. I think that's really interesting because it's clear there's enormous amounts of money getting spent in AI across there. And the fact that Apple is the stock that's leading us higher this morning.
Yeah.
I mean, Apple just sells very expensive stuff that other people manufacture for them. They don't actually come up with anything new. The reason that I am an Apple addict, if you were to look around my office this morning, there is Apple everywhere. But that's because I grew up in a generation where Apple was new and exciting and innovative. I mean, they haven't done anything innovative for decades.
It's honestly one of my bugbears, Bill. Why Tim Cook is still in charge of that company. The man he's out of ideas, and it's time for him to go and let somebody come into Apple that can take this company forward.
I might introduce you to the head of Apple UK to have that discussion.
It's incredible. I mean, we should have Apple everything by now. It's the brand, like you say. I've got my my watch, my phone, my laptop. You know, if I should have Apple banking, I could be driving an Apple car. I should have an Apple, you know, the Vision Pro kind of thing. You know, it should be great and it should be easy to buy. Anyway, talk to me.
Yeah. That's another story for another day. Anyway, exactly. What's the next thing? What have we got to look forward to?
Yeah, the earnings estimates post this quarter and starting to put in the estimates for the next quarter. Where do we go with these earnings estimates?
Okay, so that's a great question, Rich. I love it when you ask things like that. The market is high-fiving itself today because the earnings in this reporting season have been better than expected. I think it is. I think I quoted 80% as better than estimates, and someone else told me, no, the real number is only 73.5% better. It doesn't really make a difference. I mean, the fact is, earnings have exceeded expectations. But let us not forget that these expectations were set low because everyone anticipated a much higher damage to be done to the US economy by Liberation Day tariffs.
Yeah.
And they haven't happened, and so the earnings have been better. The smart analysts are going to look at the coming quarter, which will start from October. We'll start to see the numbers coming out then. And again, they will be setting lower. And I do think that the fact that Trump's been able to get agreements on 10 to 15% with most nations will mean that the economic damage is limited. So you're still going to have that impulse driving the market, which is why I think that the coming correction isn't going to be a terribly deep one. And unless...
Ooh. Unless, yeah, talk to me. Tease us with the unless.
Unless is the no-see-em. You know, there's a great Scottish expression for a midgie, a horrible little biting insect that apparently the Romans brought to Scotland.
Is that right?
And they're so tiny that my granddad and my dad used to call them no-see-ems because they would bite you and you wouldn't know about it until the swelling came up. That's what happens in markets. I mean, other people call them black swans or things like that, but it's a no-see-em.
Yes.
It's something that happens, and it's often there in plain sight that suddenly impacts the market. And the one that I'm thinking about this morning, it just occurred to me as we were talking about, is this issue of what would happen if King Charles was to withdraw the invitation for Trump to come for a state visit. Trump would no doubt throw a wobbly. The UK would probably be slung on to 35% tariffs. There'd be all kinds of negativity in the market. And the rest of the world would watch and they'd go, he did a deal, he agreed a deal. The reason the British have done this is for perfectly acceptable multiple reasons, and you just get another outburst of instability and uncertainty in markets. I suspect that will not happen. We'll find a way of that. Yeah. I've just received a message from one of my Canadian mates who says that the Canadians are all sitting in their hotel in Washington. Discussions are ongoing. Well, this is actually Trump playing a game. He's doing the old drama triangle thing.
And the tariffs don't come in for another 7 days, so in 5 days' time...
No, they didn't. They kicked in last night, Rich.
Oh, sorry.
That's the really interesting thing. Everyone else gets 1 week to get their tariffs in place, but the Canadian ones kicked straight in, which is fascinating. And I thought one of the really funny things, is last night Trump was justifying this because of the amount of fentanyl being found coming over the northern border. Well, it turns out that since January, US Customs have seized the incredibly big tonnage of 19 kilograms of fentanyl. They are seizing 10 tons every day on the Mexican border.
Well, I don't know what you do with fentanyl, if you smoke it or you take it, but somebody is smoking something.
I've never even heard of the stuff.
On this S&P 500, because let's have a look at the EPS squiggles, this wonderful chart that we get from Yardeni. So there we're talking about 2026 EPS estimate of $301 per share. 2025 is 264. Like you say, that's come down from 280. So we've had a drop in estimates of about 7%. And the market's at all-time highs. If earnings estimates are coming down, aren't markets meant to go down as well, Bill?
Are you telling me that you think that US stocks might be overvalued?
I wouldn't tell anybody of such a thing.
Rich, I've been saying since the middle of the 2010s that the effect of quantitative easing, which was to make interest rates too low, that has an effect on relative values. If you set the base rate for the economy, the risk-free rate, the bond rate, as we call it, too low, then that has an effect in bringing down yields across every other asset class. So the real thing that happened during the QE era was a massive inflation in financial assets. Prices went up because yields came down.
Yep.
Now, that is what drove the phenomenal growth of the stock market. And all you need to do to see that is call up a chart showing US GDP. And what it will tell you is that the US economy doubled in size over the period 2010 to about 2024. Don't quote me in these numbers, but the trend that I'm quoting is roughly correct. So the economy doubled in size, but the value, the market cap of the S&P 500, guess what it did?
It's got to be 5x, well, 4x maybe.
5x.
Is it 5?
Yeah, there you go. Yeah. Now, you explain to me how over a 15-year period the economy doubles, but the stock market quintuples.
Oh, I can tell you. I can tell you very easily. It's because they made trillions of imaginary money, gave it to banks and said, off you go, leverage it as much as you like. And it all went into financial assets. So it's, this has got to come to an end at some point. I'm not sure what that is.
The only way that you could justify that kind of rise is that the dividends that companies are paying were up 5 times, but of course they're not. What we've seen is more speculative investment than ever before because of the overvaluation. Now, you mentioned banks there. Banks is the big thing I'm thinking about today. I'm having a conference call with one of my clients, and they want to have a chat about, the most famous Scottish bank in the world, the home for Scottish bank clerks. Everyone else calls it HSBC, but of course we know that it's at heart a Scottish bank.
Absolutely. I've never heard that, the home for Scottish bank clerks. Very good.
Yeah, that used to be the old name, the home for Scottish bank clerks, because, when I was at school back in Edinburgh about 5 billion years ago, HSBC, they used to come around recruiting direct from the schools, and they'd tell you, come and become an international officer. for the bank. You don't need to bother going to college. We'll teach you everything you need to know, and you'd be in some kind of officer's mess for the next 20 years as you went around the world learning all about banking and trade and how to do these things. And so HSBC had a particular ethos all of its own that was founded in these people. But then, of course, it had to compete in the real world. But when I was working for HSBC at the turn in the 2000s, the early 2000s, it was the biggest bank in the world by market cap.
Yeah.
And we were able to go off and do things like buy one of the biggest consumer businesses, subprime consumer businesses called Household in the States. And HSBC was in a roll. The intention was for it to become the biggest bank in Europe, the biggest bank in North America, and the biggest bank in Asia. Well, you take a look where it is today, where there's a massive cost cutting going on. They've abandoned the Tower of Gloom in Canary Wharf.
The Tower of Gloom.
Oh God, it was awful. You know, working in that building was one of the low points of my career because I don't know where they got the paint from, but the British Navy must have run out of grey for their battleships because that building was so grey and dull. But anyway, today you look where HSBC is in terms of, it's still a very good bank. It still does banking very well. But you look where it is in terms of, how do you cut a bank? How do you rescale it? It's just no longer a competitor on the global stage. And sadly, I feel that's something of a metaphor for the whole of the UK financial sector.
Most definitely. Right, Bill, we are watching markets as the S&P goes through the lows yet again, 6,282. We have bust that 23,000 level. To use Bill's phrase, the American consumer is bust. Well, now the NASDAQ has bust that 23,000 level. On the way lower, vol now up 4%. We spoke about that earlier. When it starts to go, it really starts to go. How are the Americans going to deal with walking in and those retail customers losing money for the first time in a long time? Are some of them going to be losing money for the first time today? As we see Coinbase down 11, Amazon down 7, AMD down 4, NASDAQ down 3. Bill, where does it stop, or has it even started?
Well, the first thing I've got to say is I missed that Coinbase interview that you talked about. I've got to watch that because I've actually invested in Coinbase myself. Not allowed to say that, of course.
This was the CFO.
I must look at that. Look, there is something going on. I think if this was a purely institutional market, we would have seen a correction before.
Exactly.
We know that a lot of institutions had gone short the market. They were brought back into place by the power of retail investors.
I'm just going to quickly try and get a picture up for you because, as you say, if this was a normal market back in our day, it would have already rolled over. But it's not anymore, is it? It's a CTA, an algorithm-driven momentum market. And those are very different because it takes us to new levels that no human would ever consider buying at. But the computers don't care. The algorithms don't care. And
retail follow them.
And retail get very excited and very greedy. And we can see this because we've got the proof in the pudding that my good friend Andrew Hart has been good enough to send. Nomura's estimate of global CTA positioning is in the 100th percentile. They are as long as they get. These are the machines that throw this S&P 500 around. So I can see on the chat, You're already talking about buying the dip. You got 100% of long position to sell if you are in that CTA. And then Schwab's client survey, 57% bullish, the highest reading going back to 2017. What happened in January 2018? We saw a very quick turn. We saw volatility double and we saw the market drop 8% in a day. So just be careful. I'm not saying don't buy the dip. I'm saying don't bet the house on it and be careful with your leverage there.
I am going to put my contrarian hat on
Tell us.
I'm more and more convinced by that chart you just see, which is great, that what I predict is some kind of a deeper correction than just a day dip. I mean, you want to go playing by the dips and market timing, your call. But one of Blaine's key market mantras, it is better to miss the last 5% of a rally than to catch 100% of a crash.
I think that is a great way to finish off our live shows for the week. Bill, it's been an absolute pleasure. Have a grand weekend up there. You're going to have a wee whiskey for me?
No, I start my holiday today. Nipping up to Wales for a friend's birthday, and then we are off sailing for a couple of weeks. Now, I'm going to be writing the porridge intermittently. I'm hoping to join you guys next week, and you can tell me what's going on in markets, because I want to prove that Starlink works from the boat.
Oh, fantastic. Oh, that will be a good test for us, for sure, and for Elon.
Yeah. I mean, years and years ago, I did manage to use a satellite phone to trade treasuries from the middle of the Irish Sea during the Fastnet race. And I think we made an $800 profit on the trade. Oh. The problem was that the satellite time cost $1,300.
Oh, no. Wow. Okay. Yeah, before the cost came down there.
Yeah.
Thank you.
I better let you get on with the day.
This is brilliant. And just a reminder, what a wonderful hour. Joe and Bill Blaine back to back. If you have enjoyed it, please give us the thumbs up and please give us the subscribe if you haven't subscribed already. That will be a wonderful way for us to finish the week. Now on Monday, we've got some real exciting stuff. So Monday coming up is myself and Beachy through. Garth McKenzie's back. We got Expert Edge with Garth McKenzie at 8:35, and then there's a lot of me on there. Have we not got Angeline back on Monday? Is she taking another day off? Is she off the whole week? Stop. That's it. I'm done. Bill, enjoy your weekend. Everyone else, enjoy your weekend.
I will do.
I'm going on strike now. We might be back, we might not. Let's see what the non-farm payroll does. If the market's down another %, I'll think about coming back in on Monday. Welcome back, welcome back. I am very happy to have Tom Price in the building.
Thank you.
So just to give you a bit of background, Tom and I worked together at Macquarie. He was the big boss, the head of commodities research.
Yeah.
And if you're head of commodities research at Macquarie, then
you're on a plane all the time, just talking to strangers. Yeah.
Give us a little bit of an introduction to how you ended up in that position to start with. And
just a series of bad decisions, thanks, Richard. So, but yeah, no, it's just the last bank I worked at, currently at Panmure Liberum, doing more or less the same thing, just powerful, deep, insightful commodity research.
Brilliant.
Yeah.
And then did you come from a mining background? Were you down there underground?
No, I did some underground time. I used to be a geologist, but my specialty was exploration geology. So I used to go out there and look for stuff. Yeah.
Right. And then that was back over in Oz?
Yeah, mainly in Australia, but spent some time in dodgy places like Central Asia, Russia, just looking for stuff there too. Yeah. I know, it's pretty exciting. Yeah.
Now, what excites you about the sector?
Well, it's you have to be good at macro and thinking big, because the sector I looked at, global commodities, so base metals, precious metals, bulks and stuff, they just get tortured and tossed around by a casual throwaway statement by, I don't know, a US president. And so it really keeps you on your toes. You've got to be on it all the time.
And what's the key to understanding commodities as a whole, would you say?
I generally tell people you've got to know who the big buyers of a commodity are, or is in China's case, and who the big producers are. And every market, even though broadly they sit in the commodity space, they're all structured differently. And so you've got to understand what those structures are. Does it favour the producers? Does it favour the buyers of those commodities? And try to figure out which element of each market dominates price action.
Right. So demand supply, really working out where the imbalances are, oversupply. What would you put them into buckets at the moment, do you think? Or?
Well, there is some market. The bucket I would toss some of those markets into, if we're talking buckets here, is which commodities does China desperately need to keep the economy functioning?
Still that's what we were playing in 2007.
Well, it still matters. You know, they consume 40 to 70% of all commodities supply, but there's some commodities they have no choice but to go overseas for. So, world's biggest aluminium producer, but they actually need to import most of their bauxite. Copper, 70 to 80% of their copper units are imported, and iron ore heavily dependent on imports, and particularly from beautiful country that I call Australia, Richard. So they're the three commodities.
You'd be in a bit of a mess without China buying your iron ore, wouldn't you?
We'd still be playing cricket and doing barbecues. It's not a big deal. And maybe playing rugby, for example, stuff like that.
Yeah. Now, which one would you like to go into first? If we're going to talk about copper, iron ore,
go for it.
If we start with a couple of commodities you think are particularly interesting at the moment.
Well, I mentioned bauxite, copper and iron ore. Really, copper and iron ore dominate they're the dominant drivers of equities that most people are invested in. So think of big stocks like Rio, BHP, Anglo's, Glencore, Vale. All of those have, including Vale, have iron ore and copper exposure. So most of the time I spend with clients, I'm always talking about those two markets.
Okay.
And so I think that's probably where you need to focus on.
So that's us showing high grade copper. Would you rather I get LME up, or is that a?
Yeah, I've never. Yeah, high grade copper will do. The price action will be exactly the same. And crikey, that is going vertical. I wonder what's driving that one, Richard.
Yeah.
Probably a US price.
Yeah, almost as if somebody's interfering in the global dynamics.
That's a good word, interfering. So it's amazing what a 50% tariff will do to a trade. And over the last 12 months, and it's not just the last few weeks since the US president decided to load up 50% tariffs, this market's been pricing a 50% tariff or something big for months. And we've actually seen a big transfer of copper into the US to try to close that arbitrage, and it hasn't really closed yet.
What kind of percentage, when people talk about, right, you need a lot of copper for electric vehicles, for AI data centers, if I'm building a data center, is it a tiny cost so I don't really care?
That's the fact that you've asked the question that way tells me that's exactly right. Yeah, I mean, if you're building a giant building, some of the cost elements that make up that thing are trivial compared to the cost of the construction work. So a data center builder will be not entirely indifferent to copper, but it won't be a big factor.
Right.
Land access, government support and subsidies for the program of building it, so on, they're far more important. They probably spend more time on that. And also, can they control those cost elements? Probably not. And also the time frame, they probably build over 3 to 5 years. So they're not really concerned about what the copper price is doing right now.
Yeah. What's the smart trade then on copper at the moment?
Well, we're famously bears on copper in the market. Not many people can get away with doing meetings with clients with that view, but they are intrigued to see us. It's like catching up with a nut job in the street who's thinking about a downside risk to this market. In actual fact, bulls and bears have been completely wrong for 3 or 4 years, since lockdown actually, because the price has basically traded sideways.
That's it, yeah. Goldman this is the time, 2022, you got to buy copper now. It's going to the moon.
Yeah, Goldman's some really powerful research there, mainly pushed by their desk. But they were talking about a super cycle thesis, which we thought was hilarious because it wasn't a super cycle. It was just a good old-fashioned inflation trade after lockdown.
Yeah.
But it's actually been trading at about $9,000 plus or minus 10% for the last 3 or 4 years, even though we've been bearish. And completely wrong, not surprising for a sell-side analyst. And the only thing that makes me sleep at night is the bulls are wrong too, because of that sideways trade. And it's possible it may carry on doing that. And that's one of the extraordinary things about the copper trade. There is a stunning amount of generalist capital that's been parked in the copper space. And so it tends to respond mainly to macro themes.
And then what about the mining stocks of the copper producers? Obviously, Anglo's, BHP tried to come and grab it.
Yep. So that was an interesting effort. 3 bids turned down. So, and then Anglo's has proceeded to dismantle itself. And what it's trying to do is get rid of all of what it regards as non-core assets, perhaps. So coal, it's just spun off the Anglo-Platts division into Volterra. It's now considering De Beers. What's it trying to do? It's trying to be a copper-rich equity, which is regarded as very appealing to investors at the moment because it's a green input for greening the planet. So,
and are there copper assets really impressive, or there's big growth potential? Or
it's got growth and it's got high quality assets, but the superstar asset in the Anglo's stable is Quellaveco. So it's a huge South American operation. When we're looking at probably a 4 to 6 sort of level mine on planet Earth, and that's a company driver if they can, carry on developing that thing. So big copper assets takes staggering amounts of money, long lead times to get into the market, and they're doing a pretty good job.
Yeah. So. And now that they've cleaned everything up, if De Beers, they also managed to divest that, is it just a bite-sized chunk for a BHP or Glencore or?
Yeah, it's only one company can clean up Anglo's, and that's probably Anglo's. And I've got to say they're doing a really good job. So, but eventually they're going to create an entity that will be enormously appealing for a major to engage. So, and the ones that investors keep sort of flagging to us is BHP, obviously, because they've already had a go at it.
Yeah.
Glencore, although it's just spent $7 billion on coal assets out of tech, so maybe it'll struggle.
But that was a reversal, wasn't it?
Yeah, that's right. We hate coal. We hate coal. Actually, we love coal. Everyone.
Take my money.
Turns out we like cash. And poor Glencore's struggling with, very weak coal prices on met and thermal. It's the biggest exporter of both. So it's going to struggle, I think, for a bit longer. But Rio, Freeport, all of these are candidates for taking out a copper-rich sort of company like Anglo. So it'll be interesting to see that play out if it happens.
Yeah. Let's move on to iron ore then.
Okay, iron ore. We can talk about gold too, see where Greatland's going to go. Iron ore. So what month is it? July. I start getting bearish about now. So I'm a seasonal junkie, as they say. I think about seasonal drivers for this trade because the iron ore steel supply chain centred on China is profoundly seasonal. So what it does is China goes crazy bringing in raw materials for their steel industry, including iron ore, after Chinese New Year through to the centre of the year. And then about July, August, they start rationalising their production rate, start thinking about maintenance programs as they enter the winter period. And usually the turning point's about September, October. But this year we've got an exciting new bear theme to talk about, and that is China's government is actually considering capping production because they see a surplus in their local market, and so that of steel. Yeah. So China imports, as I said, 80% of their iron ore units, and so that's going to sort of retard the seaborne prices perhaps by fourth quarter.
Right. And then, so this leads into our beautiful drawing there that you've sketched so well. We're going to hold that up. Yeah, brilliant. Yeah. There we go. So China's seasonality and...
They come out of winter and Chinese New Year, and that period's a great transition for anyone who's invested in Rio, BHP, FMG, Vale. Anglo's also has the Minas Rio assets in Brazil. And this is what I call the blue water period, very quiet period between May and October. So we're in the middle of that. And then we go for the downswing. Now, China's government is acutely aware of this dynamic, mainly because they get our research. But I've spent a lot of time with Chinese mills and they talk about this. And this is a period where generally they try to clean up their capacity and tighten up their supply chains, and they basically draw down inventories. And that has a big negative impact on the iron ore trade. And generally, the best time to trade this is to basically buy iron ore exposure around November, or when PAMU or Liberum Research comes out and tells you to, and then sell around here. So that's the trade there. Buy here, sell there.
And we're right at the peak just now.
Yeah, we're in this period here, so downswing. And production caps will have a big impact this industry is super lean and highly responsive to government policy. So when they're told to act, they do act. And that's something worth tracking. So the big iron ore producers are aware of this too. So
yeah.
They get our research as well.
In terms of iron ore, Rios is obviously the king.
It is. It's the superstar producer.
Oh, sorry. And we've got the chart here, and you can see the cyclicality.
Yeah, make
the
up your own word. That's fine. Call it cycles. Save yourself.
There's certainly cycles there, isn't there?
Yeah, the transition to prices is not clean. It's quite messy, and the reason for that is the mills have amazing capability of switching between their different iron ore options. So they don't just get fines; they get lump and pellet, and they also pick up scrap, and that tends to neutralise the price response to the seasonal flows underneath. But every now and then, they just can't help themselves, particularly if there's stimulus or some sort of positive outlook that is exogenous to China, and they will buy aggressively, and that will report through the price. But that's not that sort of year. They're very subdued. They're trying to manage their costs, and they're a bit nervous about this production cap that the government keeps talking about.
Okay. So, yeah, sorry, to go on to the stocks, that puts a bit of pressure on Rios, doesn't it?
Yeah, it does. So, and BHP and FMG in Australia, they're the main sources of iron ore for China. So, so China gets most of their ore from Australia and the extra bit from Vale, and they get nervous about this time of year. So, so this is, it was interesting. Their last quarterly update a couple of weeks ago. They did express surprise at how well China's economy has held up. They sort of praised China's ability to switch into the export trade because their domestic market wasn't strong, and to be able to manage the tariff war with the US. But they weren't bullish. I think they're expecting some more pressure to come on their trade, so they're a bit worried about that.
We've got a beautiful chart of Rios there. Down this morning because they reported soft numbers.
Yes.
Let's say, but I guess our traders are particularly they love trading Rios normally as a buy around these levels because it runs through that that kind of support levels normally in those mid-40s.
Yeah, so I'm talking about fundamental drivers for iron ore and rather than the equities. But the equities have been under a huge amount of pressure all year because they're getting hit by the tariff theme. So investors are going, thanks for the seasonal charts, Tom, love the drawing, but I'm really worried that China's steel-bearing stuff to the world is just going to get taken out by this tariff conflict. So I'm just going to take some money out of the big equities and just wait. And so we've seen all of them come under a lot of pressure during the course of the year. So now we're starting to see some of the metrics get to some interesting levels. And we're getting calls from value investors that saying, is this a good time to sort of get involved? And I said, okay, well, maybe just wait a couple of more months. So a better entry point's the end of the year, we think.
Yeah.
So.
Incredible. Right, so that's BHP, Rios. We've looked at Anglos. Antos, I guess we can't be bullish if we're bearish on copper.
Yeah, the most popular pure play equity with pure copper exposure. So Antos and Freeport. Freeport's just big, slow moving, and Antos is a bit more interesting. Most of their assets in Chile, and it's the exciting way to play the copper space. And they've been mining copper for decades. They are technically very competent, and they're very good at messaging the market. So if you want a nice, clean way to get exposure, that's the popular one to go for.
And have they still got the big family owners?
Yes. So it's still a big, chunky family ownership that dates back 100 years. Started off in rail, ended up in copper, and they're not going anywhere fast. Yeah. So they're quite happy where they are, and I think we've got a hold on them at the moment, the stock. But yeah, it's hard to switch to a buy given that we're bears on copper, so we'll probably just hold that position for a bit longer.
Any stocks that you're particularly interested in at the moment or think are worth a look?
Well, I tend to look at the big stocks we've just been talking about because I'm a macro guy, and decisions by the big mining companies obviously are very important to the main commodity flows. So but they're the ones that we sort of focus on at the moment.
Let's have a look at the commodities then, and so we've got platinum on the system. That's suddenly out of nowhere found some life.
Absolutely. So I've just been marketing in South Africa. So and we're bulls on PGMs. So we like platinum, palladium, rhodium. And we're also very confused bulls at the moment because the calls work, but for reasons we can't quite understand. So we would agree with you. It all happened, started to happen on Platinum Week in London, middle of May. So we were hanging out with PGM gurus, WPIC, the Oxford crowd, and also the Anglo Platts mob, having lunch with them, drinking, laughing, saying, yeah, the price is going to lift. The price is lifting, and over the next few days, it started to lurch higher for no obvious reason. Looked through our network of contacts, didn't find anyone who was sort of restocking because that was the famous driver everyone was holding out for.
Right.
And in the last couple of months, it's bolted on 30 to 50% to very subdued price action that lasted for years on nothing in particular still. Yeah. And so we're still trying to come to terms with that.
I think it was because I sold my palladium.
Is really
that was the final.
It's a
resistance.
Inventory poor market. So thanks for releasing that stuff. So what are you doing with the garage space now?
It's
the catalyst, I think, was the Volterra spin-off. I'm convinced of that.
Didn't it? Yeah.
Because in the days after the spin-off, we were getting lots of incoming queries on the state of the PGM market, what PGM stood for. So obviously we're dealing with generalists when they're asking that question. What's PMG, Tom? No, it's PGM. And then you give...
What's Procter & Gamble got to do with it?
So there's a lot of 101 sort of chats for a few days from the US and here in the UK because the listing was on the LSE. So lots of intrigue. And I think people have basically positioned in an illiquid market, and that it wouldn't have taken much to actually make the prices pop, I think.
Right.
So.
And they'd, as you say, they'd been depressed for so long or capped.
Yeah.
I guess.
Yeah, thoroughly capped. And but the fundamentals of this trade are extraordinarily tight. No one invests in new supply. Most of the supply comes from essentially two deposits, Norilsk, which we're big question mark over whether we can access that supply. We're still getting Russian PGMs, but who knows what would happen in the future. And the Mariinsky Reef in South Africa, and no one's really growing supply for one reason or another.
Yeah.
And it turns out we actually need internal combustion engines with autocats for a bit longer, maybe a few more decades. And EVs aren't going to save us. And so demands hasn't really changed a great deal. So that's a winning combination for price upside.
Yeah.
But the prices haven't responded to that until May. And now we've got a very interesting market in play.
Right, so that's gold. Yeah, we mentioned we were going to have a look at gold.
Gold, yes. So extraordinary price lift over the last 12 to 18 months. It's now sitting comfortably at about 3,300 and holding. So it's actually been range trading. There we go. You can see the range there since the end of Q1. Very tight range. I think it's 3,300 plus or minus 3%. And what that's telling me is all the bull factors are thoroughly priced in and understood by the market.
Right.
What are those bull factors? Most of them are short-term drivers. So we've got a rate cut cycle theoretically still in play. We're going to find out whether it is or not this week. But the other factors include deterioration in global trade. That was actually happening since Russia invaded Ukraine. So a lot of confusion and uncertainty between major players around the world.
Yeah.
And then that's been compounded by the fact that Trump's rolling out tariffs. So there's a lot of uncertainty there, and so people buy more gold. But you've got war themes. So we keep seeing it pop up on major incursions or events. So Israel versus everyone in the Middle East. Russia versus Ukraine, China's Taiwan confrontation, Cambodia, Thailand. Oh my God, it's just lots of themes there. Buy more gold. But the one driver that I think is enduring and extremely bullish and difficult to quantify is China's willingness to keep buying metal from abroad and storing it in a back room somewhere. And I think they have, it's quite clear to me anyway, that they've got a plan to back the renminbi and perhaps offer a reserve currency to the world and need to back it with gold. And so that's a theme that's probably worth tracking. So the World Gold Council tracks the reserve positions of all the countries. And I think China's number 6 now with about 2,500 tonnes of gold versus the US number 1 at 8,000. So they want to go big in gold. And so if you're a gold bug, that's a very exciting theme.
And that is, that's the longest of long-term plans, I guess, because how...
No one does long-term plans better than the Chinese. And that's decades long, I think. So maybe we should get comfortable with a higher gold price than what we're forecasting. So that's probably the biggest upside risk to our forecast at the moment.
Great. Smaller ones like aluminium, nickel.
So the Ali trade was knocked about last year by supply chain themes. So we had multiple refinery failures in Australia or closures. So Alcoa had some Western Australian assets. One of them was shut down for cost reasons. And Rio, in their Queensland asset refinery there, they had power issues. So we saw about a couple of % of global alumina, that's the oxide used as a feedstock for aluminium smelters, shut down. But the real driver was Guinea, sourced at 25% of the world's bauxite, the raw material that gets converted into oxide and then to aluminium. They just randomly decided to shut down exports, and that starved the market of another couple of %. So my modelling went massively into deficit, and the entire supply chain, bauxite, alumina and aluminium prices all lifted. It's all calmed down a little bit this year. So we're seeing the bauxite and alumina prices stabilise, but now the aluminium price has been knocked about by these tariff themes. So, you know, it's a very exciting time to cover that space. So, but in terms of equity thoughts, Alcoa, Rio Tinto is a big producer, Rusal, if you can trade in Russian stuff, and Chalco in Asia. So they've all been beneficiaries of these various and evolving drivers for aluminium. So think of a price of about 2,500 to 2,800. That's the range the aluminium price is going to hold in.
Now, before we let you go back to the real world, if we get a scenario where there is peace, Russia and Ukraine, and gradually, you know, backed by Trump, Russia's allowed to become part of commodity world again, what are the kind of smart things to look at?
That's a good question. So the popular view is energy markets will collapse because you get this flood of coal, oil and gas. So pre-war, Russia was the source of 10 to 15% of all those three commodities. And so they, you know, production would be cranked up because they're connected back into the world and we'd be overwhelmed with it. Not true. In actual fact, the supply rate of Russian coal, oil and gas to the world hasn't really changed a great deal. In fact, for coal and oil, it lifted and went into their dark fleets. Gas is probably the only one that was truly constrained because the infrastructure pipeline into Europe couldn't be switched physically anywhere else, and they couldn't really crank up their LNG capacity. So maybe we'll see a resurgence there. But the EU is quite determined to shut down pipeline forever. They're talking among themselves and they're trying to terminate it forever in 2027. So maybe the lack of Russian gas will keep gas prices across the world through the LNG trade higher for longer. So that's the one we're probably thinking will be the bull case. All the metals trades, copper, PGMs, they've constantly been delivered into, and aluminium, sorry, they've been constantly delivered into the world ever since the war started. It's never really been effectively shut down. So I don't think that's going to change much either. So the answer to your question is not a big change, perhaps a little bit of bullishness around gas. Yeah.